Good morning, everybody. Welcome to this Wednesday. It is, well, what is it? It is, we'll just call it ADP Wednesday, right? The ADP number. Welcome. I'm sorry, this is optionpit.com, our morning volatility report, welcoming you to, welcoming you to the ball. I'm Andrew Giovinazzi, Chief Operating Officer, optionpit.com, filling in for Mark this morning. He is on maternity leave. All right, Mark on BNN talking Apple, SPX, XLU. Also, you're going to see our Saturday classes come out. We're going to do more calendars, and we're also going to do the VIX coming up. All right, so we'll let you all know. Twitter, the 90th takeover rumor. Again, looking at the volume, we looked at this a little bit in our chat room. Such as it is it going to be true? But as usual with Twitter, it never really holds out. But we do have a little bit of a pop today. It's already fallen off, though. So we'll see. There has been some upward sloping curve in here. Kind of interesting for a stock that's kind of not doing much, right? Almost all the curve here, all the upside calls are all skewed up, and it's pretty much stayed like that. So, I mean, it's kind of in a constant state of, let's just call it takeover bid. If anything really happens, who knows? But that's where it is right now, right? Those calls are always bid, and it seems like, it's usually good for a pop every couple of weeks. So I guess it's the old thing. You buy it when it's cheap, and then you sell it when the actual rumors come out. So we'll see. I did hear they were quoting some things just prior to this pop that would lead to believe that another takeover is possible. But anyway, that's where it is. The big story, though, ADP report comes out, 177,000, something like that. It's a little light versus forecast, but it's still pretty good. We'll see what happens on the non-farm payroll number, but it's enough to keep. Basically what we have now is, I would say we have volatility in the index is up just enough to kind of keep track of the it's almost like an earnings event with the SPX. They're not, volatile. You've got decay, and they're kind of bouncing the ball up a little bit, but the market's not moving. It's kind of like a stock prior to earnings. That's sort of what we have happening here. Is that going to matter at all? I don't know. I don't know. It seems like the market wants a definitive interest rate answer, and then if they raise or they have an extra raise, we probably sell off. And then everybody looks around and say, oh, things are getting back to normal, and then we'll see where we go from there. So this non-farm payroll, again, we could see, again, another vol event. We could see another swing before they decide what to do in September. I will note that dust, what's funny is they split dust. If we look at the chart here, it's hard to look because it's split twice. The last, let's see here. It's kind of tough to see, but anyway, split adjusted, it was down to 22. Now it's 41, right? We looked at this a couple weeks ago. The only problem we had was kind of the gamma effect after the reverse split, but we looked at this as, something of interest, getting down to levels that it was, and then they split the stock. They reverse split that, and then they reverse split Nugget. So, I mean, massive falls on these things. They reversed and they split Nugget at a bad time where this thing could be going to nothing too. So we'll see if the miners essentially can hold on. Gold has been losing a bid steadily. Which to me, I'm going to say, I'm thinking that the rate case is becoming more solid. remember we got this jump in gold on Brexit, and it really hasn't. It started to, and that was a high for the miners. That's kind of the level we were. So if I'm looking at a level for gold, if we get some sort of rate normalization, that's not a bad target short term. It's kind of where we were. If this whole Brexit thing, I mean, it's not in a headline anywhere. Nobody cares. So maybe that's where we go. The next thing I will say too, rate normalization means banks. Goldman, JP Morgan, Bank of America. Bank of America still might be the cheapest premium there is on the planet, although the vol is going up in there. We looked at trades in there last week. They're doing okay. I think, picking some cheap gamma in a bank stock, just buy calls, hedge with XLF, and let it go to the end of the year. Because if you still look at these things, they're just getting to where they were at the beginning of the year, right? Back to even, and paying some dividends along the way. So this is the one sector that has been basically ignored while they were buying, just look at this, look at AT&T. Again, AT&T is a growth story. I think that's fine. But you've got the same thing, huge capital gains in these things. So, banks' balance sheets look as good as they have ever, more cash, less risk, blah, 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 take what you want. But it's still, for the year, they have done nothing. Okay? And obviously good opportunities when everybody was worried. But I think XLF is a good cheap hedge against some long calls. I think that's a nice trade. I think that's a nice trade going into the end of the year because I think the Fed is going to hop up one time. You'll get one rate rise. That'll signal some normalization. You might get another 5 to 8% out of the bank, something like that. Again, total guess and speculation. All right? But we'll see how that goes. As far as vol goes, I expect VIX to kind of hang at this level, and we could get a pullback to the 12s by the end of the week, or the market starts to freak out about rates, which is always possible. Again, I think rising rates overall is going to be good for banks. It's hard to see a bad thing for them because ultimately they're still not that high. They're just giving them some room. However, algo-driven, basically all of the parts of the market that people have been buying on low rates could start to get affected by that. Gold could get hurt. The miners could get hurt. Those things got bid up huge. So I say just keep an eye on those products. I will in our chat room. We'll see if we can find a trade on them. It's just been hard because the markets are so wide, and then we might have to just go to GDX or GDXJ, something with some real liquidity. And with that, I will see all of you, or many of you, in our chat room this morning.